Well, good morning, everyone, and welcome to today's educational webinar on holding physical precious metals within an IRA. My name is Ryan Griffiths, and I am the Director of Operations here in our Precious Metal Service Center in Northern Nevada. I will be hosting today's webinar and answering any questions you may have on our process and the parties involved with holding physical metal in an IRA. Before we start, why don't I just give a little bit about myself, a little background on myself. I've been with Entrust now for over 10 years. I originally began my career with Entrust as the operations manager in one of our Southwest Florida affiliate offices. In 2006, I took a management position here in our corporate office in Northern Nevada. And then 3 years ago, when we made the decision to open a specific central operations center for precious metals, I jumped at that opportunity, as physical metal has been a passion of mine for a number of years. So I thought that would be a great fit for myself and the company going forward. We, in the last 7 years or so, have seen a huge increase in the number of physical precious metal IRAs that our firm has administered. And it's that demand that has prompted today's webinar. So what we're going to do is basically go over the agenda that you see here on our screen. Our goal today is to not only talk about the regulations that oversee physical metal IRAs and the types of assets that can be held in IRAs, but also discuss the parties that are involved and the role that they play. Also an overview of the setup and purchase process within an Entrust account. And then we'll touch on a few benefits of diversifying a physical metal IRA with precious metals and based on historical data and just a general overview of the reasons why one would choose to hold physical metal within an IRA. One of the things that we'll do, that we always do with our webinar, is that you're always welcome to ask questions. Simply type in questions on the side. What I'll do is between slides, I'll take a few seconds, see if there's any relevant questions to that slide. I'll go through those. This is really this presentation is really for you guys to have any questions answered, so feel free to type those in. If you type in an answer and I happen to go skip through it, that only means that we'll address that question later on in the presentation, so don't think that we are ignoring you. So feel free to answer or ask any questions you have, and we'll go ahead and answer those throughout the process. See, it sounds like you're having a hard time hearing me, so I'm going to go ahead and turn this up. Hopefully it's a little better. A little bit about Entrust. We've been in business for over 30 years, founded in 1981. We currently administer over $4 billion in assets for clients. One of the benefits of Entrust is, as you probably know, is we have local offices throughout the country. And what we have those local offices in place for is to provide education. We pride ourselves not necessarily that we sell or promote any specific products, but we do take great pride in educating our client base to let them know what assets are allowable within IRAs. So we do pride ourselves on teaching CE classes not just to individual investors, but to CPAs, to attorneys, to real estate professionals. And obviously, as with today's webinar, we tend to do quite a few national webinars to help the general public understand what IRAs can invest in outside of the typical security markets. Just a little quick disclosure, as I kind of noted, we do not sell or provide any type of investment advice. We don't sell any product. We don't provide any advice, but what we do is educate clients. So all the information that will be discussed today is strictly for educational purposes. We do our best to educate clients on what is allowed per IRS code, but we are not here to recommend any products or investments. We'll simply let you know what is allowed and not allowed. Today's webinar is going to be focusing strictly on what I refer to as our conventional domestic option. Within the domestic option, clients can choose a dealer of their choice as to who you buy the actual product from, and we'll get into detail of that here shortly. But the client will choose who they buy the product from, and then they'll also choose one of 4 domestic depositories where the assets will be stored for safekeeping and insurance purposes. That is the process that today's webinar will go into great detail on. The other two options that Entrust clients have available to them within the same Entrust IRA is an international option of buying physical metal through a recognized international dealer, which then has 5 international storage locations available to them. Then we also have a new product that was released, or a new purchasing process, if you will, that was released back in March. It's actually an online trading portal where clients can buy physical coins or bars directly online, similar to a brokerage account. Then those products are delivered to one of 2 Brinks facilities for safekeeping. We will be having a webinar on that process here within a few weeks, but today we're going to focus on the top option of choosing a dealer of your choice, buying physical metal through them, then having that metal shipped to one of 4 depositories for safekeeping. Getting into the do's and don'ts of IRAs. So obviously when it comes to physical metal, it's important to understand what the IRS allows. As with the IRS with any type of investment or any type of instructions from the IRS, they tend to not necessarily tell us what you can do, but they do go into depth and tell you what you cannot do. Looking at IRS code that applies to IRA, which is code 408M, it specifically states that there are certain types of collectibles that cannot be held in IRAs. And what is listed are basically works of art, rugs, antiques, metal, gems, stamps, coins, and alcoholic beverages. So looking at physical metal, you would say, well, that doesn't qualify because it's viewed as a collectible. So yes, in theory, per code 408M, metal and coins are disallowed by the IRS code. But what they did is they added exemptions to the code, which opens up the door for certain types of coins or metal. When the original code was written back in the 70s, there was an exception written at that time that allowed certain types of gold, silver, and platinum coins to be held in IRAs. And if you look at Section 5112A, it basically outlines American Eagles. So IRAs have always had the option of buying American Eagles within an IRA from the late 70s. But really in 1997 is when the Taxpayer Act was passed. That's what really opened the door for physical metal. And if you look at the Taxpayer Act of 1997, it added an additional exemption to Code 408M. And if you read the code, it says now exempt are any gold, silver, platinum, or palladium bullion bars that meet the fineness requirement, meet or exceed the fineness requirement of a contract market or an exchange-approved market contract. But it also states if such bullion is in the physical possession of a trustee described under Section A, and we'll get to that in a minute. But basically what the Taxpayer Act of 1997 did is it allowed physical metal in bar form to be held in IRAs as long as that bar met the purity level as outlined in the exchange contract, but it also has to be minted by an exchange-approved brand. So that basically has to be a bar that you could take and sell in the open exchange as a commodity, as a pure bar of gold, silver, platinum, or palladium. I'm just going to take a quick second and look through some of the questions real quick. And those will be answered here shortly. Moving on in detail, that same Taxpayer Act of 1997 that allowed physical metal to be held in IRAs, as you noted, or as I mentioned, it also states that those assets must be held in the possession of the trustee or custodian of the IRA. What it refers to as a bank or a bank-like entity. And Code 408N goes into detail as to who qualifies to hold these assets in order for them to be viewed as IRA-allowed assets. So it's basically any bank that is a federal or national, a national or state-chartered bank. Any type of insured credit union would also qualify to act as trustee or custodian. And then any corporation that is governed by a state banking commission. So if you look at the code, it's basically any bank, any credit union, or any chartered trust company within a specific state. those are the same types of entities that can act as custodian for IRAs of other assets as well. So basically what the Taxpayer Act of 1997 was stating is that physical bars can now be held inside of IRAs as long as they meet the purity level and can be sold as an exchange-approved brand, but are also stored in the possession of a custodian for safekeeping purposes. So it's an IRA-owned product, just like a stock, bond, or mutual fund, but it's being held by a custodian. In this case, it's a physical bar or a coin that is stored at a regulated entity. A question just popped up, and I meant to mention this earlier. This will be recorded, so if you have to head out earlier, if you're having problems logging in or hearing the webinar at this point because you're not near a phone, it will be recorded. It will be placed on our website within a few days, so you're always welcome to watch it there. And of course, you'll have all of our contact info by the end of this presentation. So any specific questions that you have regarding the presentation, feel free to give us a call. Moving on to the Taxpayer Act. So basically what it outlines, obviously we talked about the bars and rounds that meet the purity level, but it also opened the door for additional types of coins that even though they're in coin form, they're basically considered bullion because they meet the purity level. Some examples of those are American buffaloes, Australian kangaroos, Austrian philharmonics, Canadian maple leafs. All of these coins, even though they're in coin form and they have pictures of individuals on the front and or back, they're basically viewed as 1 ounce of gold or silver. So from a market standpoint, they're treated as if they were just one ounce bars, but of course they're in coin form. So they are allowed for the Taxpayer Act of 1997 because they're basically 1 ounce of gold or silver, platinum or palladium. Question just came over, do Cougarins qualify? Very popular question. Unfortunately, they do not because they do not meet the purity level. Even though they're one of the most popular traded coins on the open market, they unfortunately do not qualify for IRAs because they do not meet the purity level. I want to say they're 0.92% gold or silver, so they don't meet the purity level to qualify as an IRA investment because they're not pure enough to meet regulations. Moving on and just flipping through any other questions related to the tax code. So that kind of gives you an overview of where it states in the IRS code that physical metal can be held in IRAs and the types of assets. And we'll go into a little more detail about different assets, but any questions you have regarding those, just let us know. Flipping through these questions, they all appear to be okay. Those seem to be addressed. So the next topic that we're moving on to is now that we know what can be held in IRA, let's talk about the parties that are involved. When I speak to clients, I usually say that there's three parties that you need to be aware of when looking to purchase physical metal in an IRA. The IRA custodian or administrator is that role that is outlined in the Taxpayer Act of 1997. So Entrust playing that role as custodian/administrator. What we do is facilitate the transactions on behalf of the IRA per the IRA holder's request. We do not buy or sell any product. We do not recommend the product. We simply act on the direction of our clients. We then provide ongoing record keeping to both the client and to the IRS for the market values of the assets within the plan to meet that requirement. The second party involved would be your precious metal dealer. You can certainly purchase your metal from any dealer of your choice as long as you're not buying or exchanging between yourself or any other disqualified individuals, which are basically family members. You can buy those assets, those metals, from any dealer of your choice. When choosing a dealer, it's completely up to you. Just make sure you do your due diligence on that dealer. Some things to keep in mind when choosing a dealer would be the type of products that they sell or specialize in, commissions that they may charge above spot or cost price. All those are things to consider because there will be fees to the dealer from whom you're buying from, and each dealer will have their own set of fees and processes when placing orders, but we'll get into that when we get into the funding transaction process. The third party involved, of course, is going to be the depository. Back to the Taxpayer Act of 97, stating the assets must be stored in the possession of the custodian. At Entrust, we do have offices throughout the country, but we do not have a specific depository or vault that sufficiently store these assets for proper safekeeping. So what we're able to do is basically work with other regulated entities that offer depository services and utilize their facilities. So the depositories, and there's 4 depositories that we work with, would actually store your assets in a vault in your name. The assets would be stored there for safekeeping. They are all insured per our regulations by Lloyd's of London. So your assets are secured in a safe vault, and that's the role the depository plays. Keep in mind that depositories will have their own fees, and we'll get to fees here in a minute, but there are fees to the depositories for safekeeping. Usually varies between $95 and $165 depending on the facility that you store at. So just as a quick snapshot, and we'll get into details of these different parties here shortly, you'll have the IRA custodian or administrator that oversees the record keeping on the assets of the IRA. You'll have your precious metal dealer from whom you're buying or selling your product from. Then you'll have your depository, which plays the vault and safekeeping role for the assets. Fees to consider. Sorry, I was just flipping through questions, and a lot of these will be addressed here shortly. Fees to consider. Your IRA custodial fees, Entrust, we charge a flat fee of $150 per year, regardless of value, market value of the assets, disregarding any trades, as we do not charge any type of transaction-related fees, so you can buy and sell as often as you like within your IRA. You can take physical delivery as often as you like. There are no additional transaction fees that we charge. The only fee that you would see charged by Entrust is a flat $150 annual fee. That fee is charged on the day of your first order. So if you set up an account, fund it via transfer from Schwab, funds are sitting in a cash account for 2 months, there are no fees for that. Your first fee would, on the day of your first order, where we release funds to the dealer of your choice for an invoice submitted by you, that is when the $150 annual fee will start, and it will be billed every year on that anniversary date. Precious metal dealers will have their own fees. You can certainly find these on their website. Basically, a precious metal dealer's fees are the price of the product above spot, or whatever the going rate is for that particular product. So for a 1-ounce bar of gold, if they're charging $25 above spot for that asset, that's basically their commission built into the purchase price. Most dealers will cover shipping for you to the depository of your choice. A number of them also store at these same depositories, so there may not even be shipping costs, as it would be an internal transfer from their vault to your vault, but we'll get into that detail here shortly. So fees to a dealer can basically be determined at their price for their specific product above spot for a particular metal. Fees to a depository, and as mentioned, there's 4 depositories that we work with. One is in the state of Delaware, which is Delaware Depository. One is in Massachusetts, which is CNT Depository. One is in North Dakota, which is Dakota Depository. And the last one is in Idaho, which is Idaho Armored Vaults. If you would like information on those different depositories, you can always email our firm at Precious Metals at the Entrust Group, and I'll put that up here shortly. But you can always email us. Not only would we send you our starter kit, we would provide you the election forms for those 4 different facilities that outline their fees. All of them provide either segregated or allocated storage, and we can get into that shortly. Fees will vary between $95 per year at Delaware Depository up to $160 per year at the other facilities. So fees range from $95 to $160. So depending on the facility that you store at, you're looking at anywhere from $245 a year up to $310 per year as a total cost for holding physical coins or bars within your IRA. I often get asked why it's so expensive to hold physical metal as opposed to, say, an ETF, which many individuals feel there aren't any fees for. It's because you're actually buying physical product. You're buying physical coins. You're buying physical bars that are held in your IRA's name that you could eventually take possession of if you ever wanted to as a distribution. So there are going to be costs for the safekeeping and insurance of those assets. Buying shares into an ETF or an exchange-traded fund, something along those lines, even though their management and transaction fees are kind of built in behind the scenes, so you don't really see it as a fee because there's no transaction fees to buy into those shares. They do charge a management fee for overseeing the fund itself, and that's outlined in their prospectus. So yes, the fees may seem a little higher when you're talking about a physical metal IRA, but that's because there's actual physical metal that's being moved from the dealer's vault or shipped from a dealer to your vault and then stored there for safekeeping. So those are the three parties involved. So when considering a physical metal IRA, it's important to understand those three parties and the roles that they play. When it comes time to opening an account or the process for getting started, it's pretty straightforward. And what we're going to do now is spend some time going over that process of opening an account, placing a trade, seeing the role that Entrust plays on the buys and sells, seeing the role that the dealer plays for taking your orders, and the role that the depository plays for storing the assets. When we talk about opening an account, we usually say there's 5 easy steps. The first step is to obviously contact Entrust and to establish the account. An IRA can be established within a few minutes. We do have a 3-page IRA application form, which can be submitted to our firm along with a copy of a valid photo ID to establish the new financial account, whether it's a traditional IRA, Roth IRA, SEP IRA, or simple IRA. We administer all types of IRAs. Those IRAs can easily be established within a few minutes. So once the account's established, your second step, of course, is to fund that account. Depending on where your funds are currently held will determine the way that you'll fund this new account. If you have an existing IRA, say at a brokerage house or a local bank, that's viewed as an IRA to IRA transfer. Funds are already in an IRA. There's a 2-page form to complete, to fill out, to move funds from an existing IRA to a new Entrust IRA. We'll get into more detail of this in a minute. I just kind of want to outline the different ways of funding an account. Transferring from an existing IRA, rolling funds over from a previous employer plan, which is referred to as a rollover deposit, or of course you can always make an annual contribution. So really the 3 ways of funding an account after it's been established is transferring from an existing IRA, rolling over from a previous employer plan, or making your annual contribution. Once your account has been set up and funded, the next step is to choose from whom you'll be buying the physical metal from, your precious metal dealer, and then also the depository that you'll be storing at. You don't necessarily need to determine where you're going to store your metal at as part of the application, but prior to placing your first order, Entrust will need that information so that we can provide those instructions to the dealer on the day of funding. So once the account's set up, funded, you choose your depository, you choose your dealer, and then you simply place your order with your dealer. Most dealers that are familiar with the Entrust process and the fact that we have a same-day funding policy that we'll get into shortly, this allows dealers to basically take your order right over the phone. Most large dealers here in the U.S., if you call them up, just reference that you'll be placing an order through your Entrust IRA. They'll usually take your order right over the phone to lock in a current price for yourself. So if you're watching the market, your Entrust account is set up and funded, metals have a little bit of a pullback. At that point, you can call up the dealer at any time, place the order, they'll lock it in right over the phone. So you can lock in a price whenever you like. What will happen then is in step 5, after that order has been placed, either the dealer will either send the invoice directly to Entrust for funding, or maybe sometimes they may send it to you and you can simply forward it to Entrust, but most of them will send it directly to us. We will then process the order as step 5 of funding the transaction. So what we're going to do is kind of spend a little bit more time in detail on these different steps to give you a good overview of how it all works. As mentioned, step 1 of opening the account, we had already mentioned the types of IRAs that Entrust will allow physical metals, but we also administer health savings accounts as well as educational savings accounts. Both of these type of accounts can hold physical metal and follow the same process as an IRA. Opening the account, as mentioned, is a very straightforward process. You can either download a starter kit from our website, which is Entrust Gold IRA, or you can always email our team and we'll send you the PDF Any questions you have when filling out that application, you're always welcome to call us. We'll be happy to walk you through it, but it is a pretty straightforward process. Funding the account, as mentioned, there's 3 different ways to fund your account. They each have their own process. If you're going to be moving funds from an existing IRA, say at a brokerage firm, a large private bank, or a local community bank, Entrust will handle that transfer for you. It will be a custodian-to-custodian transfer. It is not a taxable event. It's simply a movement of funds from one IRA to another. IRA transfers are portable. They do not incur any fees, and as mentioned, it's not a reportable event. So you can simply move funds back and forth between IRAs as often as you like. It usually takes about 3 to 5 business days to process. Once you've completed that transfer form, you'll submit it to Entrust via fax or email. We'll then reach out to your current custodian and initiate that transfer. Once the funds hit your account, it will trigger an automatic email to you letting you know the funds are available. At that point, you can call your dealer to lock in a price. Second way of funding an account, and becoming more and more popular in today's day and age, are rollovers from previous employer plans. This would apply to 401ks, 403bs, thrift savings plans if you're a government employee, any type of employer-sponsored plan. Once you have a triggering event, which is either severance of employment or reaching the age of 59 and a half, you're able to move those funds out of the employer plan into a traditional IRA. The benefit of moving funds from an employer-sponsored plan to a traditional IRA is that IRAs have a much wider scope of investment choices, everything from physical metal to real estate to privately held businesses to private notes, stocks, bonds, mutual funds, just a wider scope of investment choices than you may have available to you within a 401k plan. So rolling funds from a previous employer plan into a traditional IRA is a very simple process. It will need to be initiated by the IRA holder. As participant of the plan, you would need to reach out to your previous employer, or if you know who the administrator is, whether it's Fidelity, Vanguard, Pershing, whoever it may be, you can simply request a direct rollover form from that firm. On that form, you'll simply provide your Entrust IRA information, which we will provide to you in our initial welcome letter, and then you would submit that form to your previous employer plan or administrator. They will then issue a check directly to Entrust as a rollover deposit. There are 2 ways to take a rollover. You can either have the funds sent directly to your Entrust IRA, which is the more preferable route, or you can have the funds sent to you. Then you have 60 days to return them to an IRA before they become taxable. The downside to doing that method is that if they send the check payable to you, they will be required to withhold 20% federal taxes. Whereas if they make the check payable directly to your traditional IRA or other qualified plan, they will not be required to withhold anything. They'll release the entire funds because it's being moved to another qualified plan. So that's the second way of funding your account via a rollover. And of course, the last way you can always fund or add to your IRA is through an annual contribution. Each IRA has a contribution limit. For traditional and Roth IRAs, depending on your age, if you're under the age of 50, the maximum contribution for 2013 is $5,500. If you're over the age of 50, you have a $1,000 catch-up, so you qualify up to $6,500 as a contribution. SEP and simple IRAs have higher contributions because those are employer plans. You can either view our website or give us a call, and we can kind of go over those contribution limits for the employer-sponsored IRAs being the simpler SEP. But you can always make a contribution to your IRA for additional purchases or just the initial setup. Just flipping through the questions that we have here. A question came up, and I might as well address it now because I don't know that we get into it later. It's regarding setting up an LLC where the IRA would be the owner of the LLC, and then the IRA can then appoint the IRA holder as a manager. These are often referred to as checkbook control LLCs or single-member LLCs that are owned by an IRA. They have become popular over the last couple of years after the Swanson court case from the late 80s. went down or was released, basically stating that it was okay for an individual to act as an administrator for specific types of assets. So really what the Checkbook Control LLC is popular with is, say, rental properties, where you have multiple rental properties and you want to act as the management company yourself of collecting the rents into the LLC, paying the bills out of the LLC, and just kind of managing all that for yourself. Or if you have a number of private notes where you've lent money out of your IRA and you want to track those payments yourself. So those LLCs have become popular, and Entrust does administer those under certain circumstances. They have fallen under a lot of scrutiny, as you can imagine, over the last few years, as a lot of abuse has happened within these LLCs. They tend to get audited a lot more or reviewed a lot more by regulators because of the abuse of being able to take distributions without reporting it. But not to get too far into that, back to the initial question of whether I can set up an LLC, work with a dealer of my choice, and then have the metal stored by the LLC, which basically would allow you to store the metal yourself. Unfortunately, there were a number of private letter rulings that came out against that. The IRS deemed the LLC as a pass-through entity, which it basically is, saying that the LLC is just a shell company, if you will. The actual owner of the LLC, being the IRA, still has to follow the same rules as if it were being administered by a custodian or another administrator. So in order for an IRA to own physical metal, per the Taxpayer Act of 1997, it has to meet the fineness requirement, and it has to be held in the possession of a regulated bank or trust company. If the LLC buys metal through an LLC, the IRA buys metal, stores it in your own possession, that is going to be viewed as a collectible and deemed as a prohibited transaction not allowed by IRAs. So unfortunately, setting up an LLC to be able to take possession, unfortunately, the IRA is still the owner of the assets and would still have to follow the same rules, and in this case, it has been deemed as a distribution, so that would not work. It's a very popular question, and I know for a fact there's a number of articles out there on the internet by individuals who create these LLCs, but I would definitely speak to an attorney or someone that's familiar with IRS code before moving forward with that, because if you are in possession of those metals, there's a very good chance that would be viewed as a distribution. Looks like the other questions we will get to here shortly. Moving on, so we went over step 1 of opening the account, step 2 of funding your account. Step 3, of course, is choosing a dealer and depository for the storage of safekeeping of the assets. When choosing a precious metal dealer, as mentioned earlier, you'll want to make sure that they allow or offer IRA-allowed product. Most large dealers in our country now have websites. They have actual specific portions of their websites dedicated to IRA assets, so they'll usually know for a fact which type of bars or coins. If you happen to place an order for something that's not allowable, and because the dealer may not have been aware of it, Entrust will catch it prior to funding, of course. But most dealers are aware of the different products that are allowed. When choosing a dealer, once again, doing your own due diligence, you'll want to compare commissions. You want to make sure you're getting a fair deal for the product that you're purchasing. You'll also want to ask about shipping fees. If it's a smaller dealer or a local coin shop and they have to ship the metal to Delaware or to North Dakota, they're more than likely going to charge you a shipping fee, so you need to factor that into the equation when choosing a dealer to make sure you're getting the most bang for your buck. When choosing a depository, same things apply. Delaware Depository seems to be the most popular, I believe, simply because, one, they're the largest in the country, a lot of dealers store there, and they have the lowest annual fee for IRAs. But I think location tends to be the second most important decision for clients when choosing a depository. If it's a regionally based facility and you feel more comfortable storing off the beaten path of, say, North Dakota or Idaho as opposed to a metropolitan area, we have those options available to you. Entrust does not sell or promote any specific dealers or depositories. We simply make them available to you, and then it's up to you to determine where you want to store. One of the popular questions we receive has to do with allocated versus segregated storage. The best way that I can explain that to you, when you refer to allocated storage, take Delaware Depository, for example, Entrust would be the account holder. So Entrust, as administrator of the IRA, has a master custodial account, storage account with Delaware Depository. Within our vault, all of our client assets are stored there, and then they are sub-accounted for by bar type and or coin type. So for example, if you bought a 2012 uncirculated American Eagle and you wanted it stored in an allocated vault at Delaware, it would be stored in the Entrust segregated vault, but then it would be stored with all other assets that are similar. So a 2012 American Eagle would be placed into the vault, but then stacked and stored with all the other 2012 American Eagles from that same year. So you would always get the same year, same coin back. It may just not be the exact same coin. Same goes for bar type. If you bought a 100-ounce Johnson Matthey bar, it's deposited into an allocated vault at Delaware Depository, you would get back a 100-ounce Johnson Matthey bar. It just may not be the exact same bar. Whereas with segregated storage, if you bought a specific 100-ounce bar, Johnson Matthey, for example, once again, you would get that exact same bar back. It is basically tagged and stored under your name, tracked by your serial number. You would get that exact same bar back. As you can imagine, segregated storage is a little more expensive for insurance purposes, but it is available at all 4 facilities. Just flipping through the questions real quick. A good question came over. One of the participants says that they have a letter from an attorney stating that the Department of Labor, who oversees IRAs, has deemed that Silver Eagles can be held by an IRA LLC. And actually that is correct. An LLC, once again, as mentioned, is a pass-through entity. It has to follow the same rules as an IRA. If you remember back in the Taxpayer Act of 1997, it was an additional exemption. Back in the 1970s, when IRAs were put into law, Silver Eagles, American Eagles Gold, Silver, and Platinum were allowed to be held in IRAs. So those assets do not have that same stipulation as the Taxpayer Act of 97 that only applies to bullion. American Eagles that were allowed prior to the Taxpayer Act of 97 do not have that stipulation of needing to be held in the physical possession of a custodian. So if you bought American Eagles through an LLC, once again, as long as you're not doing anything, and we're not here to give advice, but if you have an attorney opinion letter saying that American Eagles do not have that stipulation, that is correct, because it was the Taxpayer Act of 1997 that added an additional exemption for physical bars and bullion to be held in IRA. That was where the stipulation was placed, that those type of assets have to be held in the possession of the trustee or bank. The American Eagles were allowed some 20 years earlier and did not have that exemption. That also comes into play with the offshore option, and once again, I don't want to get into too much detail because that's kind of a different presentation, but you can make the same argument that physical metal in American Eagle form can be stored outside of the United States because it doesn't fall under those specific specifications of the Taxpayer Act of 97. So just to address that, the attorney is correct. American Eagles were allowed prior to the Taxpayer Act of 1997, therefore do not have that physical possession requirement. Moving on to step 4, so now that you've set up your account, you've funded your account, you've actually chosen the dealer from whom you're going to be buying from and the facility that you're going to be storing at. Your next process is probably the easiest of them all, but will depend on your timing of just simply calling up your dealer and locking in an order. As mentioned, most dealers will simply take your order over the phone. They'll lock you in over a recorded line. Whatever the current price is for a particular product, they'll lock it in. You normally have 72 hours to fund that transaction to keep that price, but Entrust, to make life easy, not on our clients but also for our dealers, is that we have a same-day funding policy. So if you were to call up a dealer this morning, lock in a price at $1,500 an ounce, Entrust would submit funding to that dealer the same day. So simply call up your dealer, place the order. What they're going to do is they're going to generate an invoice. They'll either email it to you or provide it to via fax, but most of them nowadays will just simply shoot you an email, and they usually will CC Entrust on that order. So if you place an order for 100 American Gold Eagles or Silver Eagles, they will submit that invoice to both you and to Entrust for funding. Step 5, funding and delivery. As soon as Entrust receives that order, as long as we receive that order prior to 1 o'clock Pacific Standard Time, which is our daily cutoff, that wire will be queued up to go out to the dealer that same day. If it comes into our office after 1 o'clock Pacific Standard Time, it will be entered in and queued up to go out first thing the following business morning. All dealers are familiar with our process, so they know they're going to be getting their funds within 24 hours, usually same day. So once that invoice has been submitted to us, Entrust will always confirm the order with you through what we call a buy direction letter, which is a one-page form, which basically is your authorization to Entrust to release X number of dollars to purchase X number of assets. So on that invoice, when we receive the invoice, most dealers will attach our form. They'll walk you through our form basically when they place the order. If they happen to just send the invoice to us, a representative will call you immediately and say, okay, we just received this order. Can you please confirm that you want to move forward with the order, and we'll initiate the wire. Confirmation, once the wire has been submitted to the dealer, it will automatically trigger an email to both you and to the dealer, letting them and you know the wire has been released, providing confirmation of that wire. In that same email, we will provide shipping or delivery instructions to the vault that you have chosen. So if you're storing at Dakota Depository and you're buying through a local dealer, we'll initiate the wire to your dealer. We'll provide confirmation to the dealer along with the shipping instructions to your vault. Entrust will then track that shipment. Normally shipments take anywhere from 5 to 8 business days depending on where they're being shipped from. Due to today's, and this is a whole other topic, there is a shortage of physical metal, which is interesting with prices falling as they are. Deliveries have been taking up to 2 to 3 weeks with even some of the larger dealers. So you'll want to make sure that you communicate that with your dealer. They'll give you an estimated turnaround time of the product being delivered to your vault. But Entrust will always set up basically internal ticklers, that if we don't receive metals within 8 business days, we contact you and the client or and the dealer. Within 14 business days, a second reminder goes out. So we're always tracking deliveries to make sure that what you ordered is delivered in a timely manner. Not only that, when the delivery arrives, we make sure that what you purchased is what actually arrived at the vault. So if you purchased 2012 American Eagles and we received NTR rounds, we'll immediately call you and the dealer and say what was ordered was not delivered. How we track that is through your online statements. You'll also be able to view this process online. When we release funds to a dealer of your choice after an order has been submitted, it's going to show on your Entrust account as an escrow asset, meaning Entrust has released the funds to XYZ dealer. The asset on the books are going to show XYZ dealer escrow account for $5,500 or whatever the order price was. It will remain in that asset type until the actual product is delivered to your vault. At that point, we'll review the order, we'll confirm that what was received was ordered, we'll make the correction on your statement showing the escrow is now being removed, the assets are being added because they're now in our physical possession. You'll also receive a detailed inventory list from the depository listing the exact product, showing the year of the coin, type of bar, all that fun stuff, so you can feel comfortable even though you weren't there to actually take delivery of it. You have all the information you need to, knowing that it safely arrived in your vault. Just flipping through some questions. It looks like we're okay on those. So that was basically step 1 through 5 of setting up an account, funding an account, placing an order, Entrust funding the order, and Entrust tracking the delivery. If you have questions on that process, feel free to IM them over. We'll address those, or you can always call our office after the presentation. We'll be happy to answer any specific questions you may have. So that's the initial process for getting set up and funded. Some of the other popular questions we are asked about, procedural questions at least, when it comes time to sell my assets or for me to take possession of my assets, what is the process? Once your IRA owns the product or metals or bars, it's stored in your vault. If you want to sell those assets, liquidate them into a cash position, keep that in the IRA for tax purposes, maybe to diversify, maybe metals have moved one way or another and you want to sell a portion of those assets and reinvest it into mutual funds or reinvest it into real estate. If you need to liquidate the assets, it's the exact same process of the purchase, just reverse. You would still contact a dealer of your choice to place the sell order. When calling up a dealer, it's probably best to at least have a printout of your Entrust statement that you can either email to them or provide to them, because they're going to need to see verification that you do indeed own the assets before they'll place an order or lock in a price for you. So if you want to sell 2 100-ounce silver bars, you'll have to provide the dealer with a copy of your Entrust statement, or if you like, you can always contact our department here in Northern Nevada. We'll call the dealer for them and do a funds verification or an asset verification on your behalf. We'll verify that you do indeed own those bars and you have them available to sell. What the dealer will then do is basically lock in a price right over the phone for you for that order. They will then submit the invoice to Entrust, but instead of funding, Entrust will then release the assets to the dealer. Once again, we will need to confirm that order with you through a sell direction letter, which is your authorization to Entrust to release those 2 bars to XYZ dealer. Just a little tidbit, once again, not giving any advice. You have to consider costs and commissions, once again, with selling. It's just something you'll have to consider. But if you're storing at, say, Delaware Depository and you need to sell 2 bars, it's probably best to find a dealer who also stores at that same facility to save yourself on shipping cost, so that you don't have to ship it across the country, because you will be responsible for any shipping costs involved. So if you sell to a dealer in California because they were given the best price to purchase it back, but it's going to cost you $200 to ship it, and that's something to consider. If you find a dealer who stores at the same depository you're storing at, there usually are no fees involved. There's certainly no shipping fees. It's just an internal transfer out of your vault into the dealer's vault. It transpires the same business day. As soon as the dealer is in receipt of the assets and they can verify that they're in good order and they're what they agreed to purchase, they will wire the funds directly to your Entrust account. Sales orders happen on a daily basis. They're very straightforward. It's just a matter of you, one, making that decision and then calling a dealer to place the sell order. Taking possession, similar process, except there's no dealer involved, of course. If you want to have 2 100-ounce bars shipped to your home address as a distribution from your IRA, you certainly can do so. One of the main benefits of owning physical metal as opposed to an ETF, for example, is that you own physical bars, you own physical coins. You have the ability to take possession of those assets for any reason at any time. It will be viewed as a taxable distribution, depending on the type of IRA, of course. And if you're under the age of 59 and a half, will be subject to an early withdrawal penalty, but it's no different than taking a cash distribution from your IRA. It's viewed as an in-kind distribution. From a tax standpoint, whatever the market value is on the day of the distribution is what you'll receive a 1099-R for. So if you take a distribution of 1 ounce of gold and gold was trading at $1,500 an ounce on that day, you will receive a 1099 at the end of the year for $1,500 as a taxable distribution from your IRA. One of the main benefits that I think IRAs have is that you are not required to withhold federal taxes. Unlike on a 401k, the employer is usually required to withhold a portion for federal withholding. That does not apply for IRAs, so you can take all of your assets out of your IRA in physical form and settle up with the government when you file your taxes next year. A couple things to consider when taking physical possession. The assets must be shipped to your legal address that we have on file. Just so you know, as part of the initial application process, we have to now do a customer identification program. We will verify your identity for fraud or any issues. So basically, we verify your identity against your legal address. That legal address is then verified, kept on file. When taking a distribution to prevent fraud, those assets must be shipped to your home address, and that's for liability purposes because we're talking about physical assets. So we'll have to ship them to your home address. You will be responsible for any shipping cost. Shipping costs are fairly nominal, depending on the metal type, of course. If you're shipping a couple 100 pounds of silver, it's obviously going to cost a little bit more than a couple ounces of gold, but you will be responsible for those shipping costs. Everything is sent as trackable and signature required at the end on your end, so everything can be tracked throughout the process. Once again, this transpires on a daily basis. It's a very straightforward process. A few questions have come up. May I pick up the assets at the depository? Absolutely. You can. Not only can you view the assets, if you have a segregated vault at one of the facilities, you technically are the account holder. You can, within 24-hour notice, can show up at the facility. They'll show you your assets. Some have different security processes than others, but that's a separate conversation. But technically, you can go. They'll show you your assets and put them back into storage. Same for pickup. If you want to, if you live in the Northeast or if you live near one of the Midwest or West Coast depositories, you're welcome to provide information that you're going to be picking it up. They'll basically generate the packages if they will for a shipment, but they'll wait for you to come pick it up. Most of them will require 2 forms of ID to verify yourself. So Entrust is always involved in that equation, whether it's a sell or a distribution. So for distributions via pickup or distributions for shipping, you have to submit that request directly to Entrust. Even though you are the account holder, if you contacted the depository and told them you want to come pick up your bars, they're going to direct you to us because we are required to do the reporting for tax purposes. So distribution cells must be submitted to Entrust. We will same day submit it to the depository. Most depositories have a 2 to 3 day turnaround time for preparing shipments for pickup, but you're welcome to go pick them up. A question came over regarding transferring metal that is in an IRA at another firm, moving that to Entrust. Yes, that is a law that's referred to as an in-kind transfer. If you have an IRA with one of our competitors, or to be honest with you, 401ks can own physical metal. A lot of smaller firms do that. Most large firms won't offer it just because of the burden of it. But if you have metal, say, in a 401k plan and you want to roll those over to an Entrust IRA, or if you have assets at an existing IRA at another firm and you want to transfer it to Entrust, maybe to utilize our customer service or our multiple depository options, you certainly can transfer metal in kind from one IRA to another. It's no different than a cash transfer. You'll have to fill out the IRA to IRA transfer form. You'll submit that to Entrust. We will then work with your current custodian to have the metal shipped or transferred to the new Entrust vault set up for your account. One thing on that note, and came over on the question, some of our competitors, and I was going to get into this in a minute, some of our advantages. One of the things we take pride in is when you purchase metal, you'll see on your Entrust statement a very detailed report of what you own, even down to the year of the coin. So if you own 2012 Silver American Eagles, or say you own 2012 Proof American Eagles, or a Monster Box, whatever, we provide as much detail as possible on your statements so that when you take possession or if you transfer those assets out, you know what to expect. I know that some of our competitors, some of the smaller firms that are out there, they may not, especially if they're storing in an allocated arrangement, may not provide that detail because the depository is not going to track it by that detail. In an allocated arrangement, Entrust is the master client at the facility. All of our assets are stored. The depository notifies us of any deliveries, but then they just stick it into our vault. We have the ability of auditing our assets. They are audited. We receive statements daily from the facility of all activities, and we're provided an outside audit once a quarter, and then we do our own audit once a year. So we have a thorough understanding of what's in our vault, but it is our responsibility as the client of the facility to keep track of what's in our vault. So what I'm getting at is if you bought a 100-ounce bar through a competitor, and you were supposed to receive a Johnson Matthey bar, but if you look on your statement with them, it just shows 100-ounce bar, and you request an IRA to IRA transfer from their vault to an Entrust vault, we'll tell you what bar type is, and we'll tell you what has come over. And if it's something that you weren't expecting, we'll deal with it at that point. So when submitting a transfer, an in-kind transfer, it's always best to get as much detail as you can from your current custodian as to what it is they're transferring. In the past, we've seen everything from clients that owned 1-ounce rounds that we requested a transfer of 10 1-ounce rounds, silver rounds, and we ended up receiving 10 proof eagles. Obviously, there's a huge price discrepancy between different products, but unless the sending firm provides you with details of what's in the account, we'll always tell you what we received, but just keep that in mind. If we receive something, you'll receive a detailed inventory list. It may not necessarily be what you purchased, but we can always get that rectified. Who monitors the depositories and how? That goes back to our audit ability. In order for a firm or institution to act as a depository for IRAs, they must meet certain requirements for regulatory purposes. We have the ability to show up unannounced at any time to do an audit of our vault. For those that offer segregated storage, not only does Entrust receive statements on a daily basis, so does the IRA holder. You're paying extra for a segregated vault. They'll track it by serial number. You'll get that exact same bar or coin back. You are included in all the audits and statements. You actually have the ability to show up and view those assets. That's on the segregated. On for the allocated side, Entrust does regular audits outside and our own audits of our facilities to ensure your products are properly recorded and safely kept, but also more importantly that the facility keeps proper insurance. Every facility that offers storage for IRAs must keep an insurance policy with Lloyd's of London. It covers everything from natural disaster to theft. It just protects the value of the assets, and that's why it's important for us to receive daily market values in case something happens. We know the exact value of the product that was in the facility. Question came over, is it possible to have multiple IRAs with Entrust? Yes, you can. You can have multiple IRAs with Entrust, but you don't need to. Within the same Entrust account, you can own everything from real estate to physical metal. There's different fee options for different assets, but it's not something that you would need. So as we move on to 11 o'clock, I'm going to kind of move forward as we're getting close to the end anyway. Just as mentioned, some of the Entrust differences, now that you know the process, you know the buy side, the sell side, the in-kind distributions. When we opened our physical metal IRA department, what we wanted to do was put together a dedicated staff, not only to assist clients, but dealers and depositories. So there's one central location that all transactions flow through, makes life easier on the dealer, makes life easier on the depository. It just makes things much smoother and efficient. It also allows us to have our same-day funding policy. I know that some of our competitors take anywhere from 5 to 7 days to process fundings. That puts the dealer on the hook, especially in a volatile market. If the dealer's waiting for funds and metals move one way or the other, that could cause problems for the dealer. So we always have same-day fundings, get the order received, get the funds processed out. We do take great pride in tracking all deliveries and reviewing all incoming deliveries to make sure what you ordered was delivered. We have online access, which is updated daily by product type. So if you own an American Eagle, it's going to have a little bit of a different price than, say, a 1-ounce generic round. We keep track of individual assets, and their prices are updated daily. We do not charge setup fees or transaction fees for the life of the account. So if you're looking to add holdings throughout the year or spread out your orders over time to hedge against volatility, or if you like to do swaps in and out of different metal types, that there are no additional fees for those transactions. What I'm going to do is take about 10 or 15 minutes. If you need to head out, I understand. It'll be on our website, but I do think it's important to at least touch on what is the benefit of holding gold, not only in physical form, just gold in general, gold and silver. What are the benefits of holding physical assets or gold and silver precious metals within an IRA? I get that question a lot. Unfortunately, I can't tell you, nor can anybody else tell you where the price of gold is going to go in the next 6 months or 6 years. They can give you, based on history, what metals should do, and I usually tell clients when you're buying physical metal, it really should not be viewed as an investment. Yes, it will move. The value of those products, silver or gold, will move up and down with the price of the actual commodity, but really what you're doing is you're hedging or protecting your wealth. It shouldn't be viewed as an investment, because if the price of gold goes up historically, it's because either equity markets are not doing very well or the value of a specific currency are not doing very, very well. So if gold's going up, that just means that our country may be having issues. So it's not meant to be an investment, in my opinion. It's more of a way to protect your wealth. And what you're protecting yourself from or diversifying yourself against is inflation, and more importantly, a devalued currency. As a value of a currency goes down, the price of that against that currency, the gold would go up. So in today's world, understanding why these assets are in such high demand and why record demand for physical delivery of assets in the last 2 months as prices were falling only reiterates that point. Investors that are buying physical metal are looking to protect their wealth. They actually want to be in possession of coins or bars. ETFs have been driving prices down, but that's more of a trading asset. People are fleeing those type of investments, and I'll get into that in a minute. So when investing in gold or holding gold or silver, it's really a way to protect wealth. Historically speaking, it's always been a way to protect wealth, a portion of your portfolio to diversify against inflation, a devalued currency, or they're usually negatively correlated against equities, meaning as equities go down, metals go up. If equities go up, metals tend to go down. So it's a way to diversify a portfolio to protect yourself. Another thing to keep in mind that I think is often overlooked is the cost of holding gold. Gold technically is a currency, and you can make the argument that it's always been a currency. Right now, with real interest rates, based on what the Federal Reserve is doing, with real interest rates being at zero or in some cases negative if you include inflation, the cost of gold is low. Meaning if you have $50,000 in cash and you put it into a money market account, you're not really gaining any interest. There are no real interest rates on cash accounts. So holding gold as a cash asset, you're not really giving up anything. Now, if interest rates were at 6, 7%, and that's what you can receive in a CD, you can make the argument, well, if I buy gold, I need to at least see an appreciation of 6 or 7% just to break even against a CD or money market. But when interest rates are at zero, holding gold as a cash portion of your portfolio makes sense because you're not giving anything up. The last reason, which is a very volatile reason, is the geopolitical uncertainty. Anything happens in the Midwest or in Asia, anything that's a crisis in the world, gold is referred to as a crisis commodity. If things look bleak from a geopolitical standpoint, people tend to, not only people, but governments in today's world, governments turn to gold as a safety asset. What I'm going to do is show a couple graphs to kind of reiterate those 3 points. To me, the most important one is that first point, is a way to hedge your portfolio, protect yourself against a devalued currency. And what this shows is basically the money supply in our country over the last, since the 1990. You can see in our country very clearly that more and more, and I'm sure you see it on the news, more and more money is being injected, basically printed and injected into our system. Well, anytime you create money or print money, in theory, the value of that currency should go down because there's more of it in circulation. In early 2012, anywhere from 2010 to 2012, you saw a lot of people fleeing to gold, and you saw the price of gold going up as this money was printed. In the last couple of years, that money is still being printed to the tune of $85 billion a month right now, yet metals are pulling back. I don't want to get into the reasons for that or speculation as to why that's going on, but we're just saying historically, as the money supply increased, the value of that currency, in theory, should be devalued. It's just not happening in today's world. Why that is, but many people believe in time, as the economy turns around, unless they're able to pull this money back off the table that has been printed, you are going to see inflation. You have to see inflation. Anyone that's taken an economics course as you print money, as you have all this money in circulation and the economy starts turning around and you're not able to pull that money off the table, inflation will have to kick in, if not hyperinflation. When that happens, the price of gold against the dollar will rise, could rise dramatically in a short period of time. What has really messed with the markets, in my opinion, over the last few years are these ETFs, where a lot of private banks, a lot of hedge funds are buying huge chunks of gold or silver as an investment, as a trading mechanism to help their portfolio. A lot of them did it over the last 2 or 3 years, but then have been pulling off the table as the speculation that this quantitative easing is going to be pushed back, or more importantly, that inflation is now being pushed back, because we're not seeing the inflation that, in theory, we thought we should see. If now they're saying the inflation may not hit till 2015 or beyond, a lot of these hedge funds are saying, okay, I'm going to pull my money out of these ETFs and put them in other places, especially with the stock market doing well. They're going to pull them out of those type of assets and put them into equity positions. That has drawn the price of metal down. Right or wrong, whether it should be, that's up for debate. But that's what's going on. At some point in time, inflation will have to kick in this country. When that does, price of metal will go up. The other issue is our national debt. As you probably know, every month the Federal Reserve is printing the $85 billion in funds, basically then turning around and buying our own debt with that. So a lot of those funds haven't, even though they're being printed, aren't really making their way into circulation to the common citizens. It's being printed, it's being given to private banks, turned around, invested into U.S. debt. So it's being printed, but it's not making its way out to circulation yet. When it does make its way out to circulation is when you're going to see inflation. What gold and silver will do as that inflation kicks in, that just means when you go to the gas station, it's going to cost you more to buy gas. When you go to the store, it's going to cost you to buy more for bread, for milk. By being in metals, as inflation goes up, the price of metals go up, you've protected your purchasing power. As mentioned, from an investment standpoint, yes, gold may have gone up, but that only means it's going to cost you more at the pump. So being diversified into gold to protect yourself, to protect your purchasing power, it just doesn't leave you standing. As inflation kicks in, when it does kick in, you have a way to protect yourself. The second point we had talked about, the lack of opportunity cost, or the real cost of holding gold, because interest rates are basically below zero or at zero. You're not really giving anything up to be in. If your advisor says you need to be 20% in cash, you can make the argument, okay, I want to put my 20% into gold. You're really still accomplishing the same thing of being in a cash position, but you're not giving up the interest rate of being in a CD or money market, because those don't exist today. You'd be hard-pressed to find a money market that pays anything above 0.25%. 2-year CDs are at less than 1%. So if you need to be in a cash position, gold and silver give you an opportunity to be in that position, but in a physical form outside of the U.S. dollar. So just a recap, and then I'll take some more questions that I see here on the side. We kind of covered the IRA guidelines of which coins are allowed, which type of bars are allowed. More importantly, we talked about the 3 parties that are involved and the fees involved in each of those parties and the role that they play, the custodian and administrator, the dealer from whom you buy from, and the depository that stores your assets for safekeeping. We touched on how to set up an account, the 5 easy steps of getting started, funded, and making your first purchase. Then we touched on some of the benefits of holding physical metal as a way to diversify, in my opinion, more importantly, a way to protect your wealth. Okay, I'm just flipping through some of these questions. Some of them are asking about foreign storage options. We'll discuss that on a different presentation, but you're always welcome to call our office to discuss that. There's a couple questions on the online trading portal, which is really, to me, I believe will be the future of buying physical gold, or at least an easier way to do it for individuals that are looking to place trades online, because it's similar to purchasing an ETF, but you're buying physical coins or bars with the ease of an online trading platform. Did not mention New York. We do not have a depository in New York. Delaware is the closest to New York. Let's see. One of the popular questions, and this is a good question, and I'll take this as my last one as we need to wrap it up here for 11:15. Is there any protection against the threat of nationalization? A very common question, everything from nationalization to confiscation, whatever you'd like to call it. Back in 1933, the U.S. government did confiscate gold as a way to protect the value of the dollar. Of course, at that time, we were still on the gold standard, so in theory, it was meant to protect the U.S. dollar. We're no longer on any type of gold standard, as you probably know. Confiscation, in my opinion, is not something to be that concerned about because it would be no different than the government walking in and taking over your car. It's an asset that you own. Now what has been talked about is nationalization of retirement plans in general. Not IRAs, have not seen any legislation on IRAs, but have seen some proposals about 401ks or employer plans. Once again, it's a difficult conversation or a difficult question for me to answer without knowing specifics, but I could tell you how it's protected on our end, what you would be able to do if there's any rumblings of that. Obviously, distribution from an IRA would probably be the first guess. It's just to have the metal shipped to your home address or take possession of those assets if there's any proposed legislation along those lines. We'll need to wrap it up now as it's 11:15. Once again, we certainly appreciate everybody taking the time. This has been recorded, will be placed on our website. Any questions you have, we're always available. We take great pride in educating our clients. Do not hesitate to give us a call. I've put all of our contact info up for our Precious Metals Service Center. Feel free to email us, call us. There's also additional information on our website, which is entrustgoldira.com. It's a specific website for precious metal investments or assets, processes, forms, all that fun stuff. Once again, we appreciate your time. My name is Ryan Griffiths. If you need any help, you're always welcome to give us a call. Take care.
Thank you. Please stand by.